Could we be seeing the downfall of Robinhood, the app that claimed to be about freedom and power to the people, the retail investor? Some news came out yesterday that could significantly hurt Robinhood, all the people that have accounts with Robinhood and its shareholders. Take a quick look at this news and then we'll come back.
Hey, Wolf, shares of Robinhood are lower after SEC Chair Gary Gensler says that a full ban of payment for order flow is, quote, on the table. This wasn't in an interview with Barron's on Monday. Gensler also saying that the practice has, quote, inherent conflicts of interest. He talks about the spreads they get, but also the data some of these market makers receive. Payment for order flow is how Robinhood makes the majority of its revenue. Other brokers also use this to offer free trading. They make money on the back end. Charles Schwab shares are also under pressure after these headlines. And the CFO of Robinhood told us recently that he does not expect the SEC to ban payment for order flow. We talked about that, resulting in higher prices for consumers. Shares of Robinhood had been lower ahead of these headlines, but again, taking a hit here ahead of the close. Shares down as much as 8% now. Back to you.
Okay, thanks so much for that. I mean, definitely, as you said, lower before this, but moving significantly lower off the back of these headlines. Mike, just trying to glance through those comments in context within what's been released of the article. It does seem quite serious weight behind what he's saying there, albeit still sort of feels unlikely he'd go to an outright ban or would not do so without kind of further consultation. Clearly, an outright ban would be very bad if it came suddenly for Robinhood's business model. One wonders whether he'd go straight to that anytime soon.
Well, it would be a long process. There's always a rulemaking process. It goes open for comment. The industry tries to sway things. But he's been pretty steadfast about really believing that the current system, and not just the payment for order flow, but just the way market structure has developed right now, where there's so much volume that basically never goes into sort of a public, transparent forum like a public exchange. And so this could be part of a very broad revamp of the way things are traded on a wholesale basis. It absolutely would put a Robinhood or other retail brokers in a bit of a squeeze, because presumably they're not going to be able to go back to charging commissions, or in Robinhood's case, start charging for commissions. You'd have to make it up somewhere else. Just for context, I mean, industry estimates and some of their disclosures say that the payment for order flow received by the firms is on the range of a sixth to a quarter of a cent per share. So it's not as if they make boatloads of money per share, but just basically right now everyone's conditioned. I trade free. You figure it out how you get paid for this stuff on the other end.
Oh boy, we got to talk about that. If you're finding me for the first time, please subscribe to the channel. Be sure to turn on notifications so when I drop videos, you get them. Also, if you want to hit me up, you want to do a one-on-one, you want to get with me, follow me on Instagram, check me in the DMs. So ladies and gentlemen, the order flow payment is something that Robinhood has done to make sure that we as retail investors can get our stocks absolutely free and not have to pay for it. But I think that because it's become so popular, especially among the Robinhood crowd, other institutions have started using it. And now you've got the government wanting to step in and say, we need to do something about it. Ladies and gentlemen, I don't think anything is going to happen. Now, Robinhood, the stock itself, has taken a dip on this bad news. But ladies and gentlemen, I'm here to tell you, just buy the damn dip. I don't see the SEC coming down on Robinhood, because if they did, they would have to come down on all these other brokerages that are allowing this same practice to happen. The SEC's reasoning, they kind of feel like investing has become gamified, that people are getting in here losing their damn money. But at the end of the day, ladies and gentlemen, to some degree, aren't we all adults? To some degree, does not every United States have some form of gambling nowadays? And you allow people to make those gambles within reason as an adult. And I'm not saying that investing is gambling, but at times it can feel that way. But if you're going to allow all these other nuances surrounding other businesses to happen, why not let someone make a conscious decision, learn a lesson if they have to learn a lesson, but don't ruin it for the people that have already learned a lesson or never had to go through a hardship and are using these various brokerage houses to make money. That's how I feel about it. But at the end of the day, I don't think that he's going to do anything about it. If anything, he might try to modify it a little bit. But at the end of the day, he's not going to get rid of it. And the very lifeblood of how Robinhood makes money is that pay for flow that was mentioned in the video. But I'll keep an eye on it and let you guys know where they're going so that you can know how to move your money around if the time comes that you have to do something. But if it ever happened, Robinhood would have to first and foremost accommodate all the individuals that are currently customers, and then they would have to do something to accommodate the shareholders. So this little jump that Robinhood has had as a dip, I say buy it and watch it go right on back up. That's going to do it for this video. Don't forget to like the video. Please comment, subscribe, get yourself that life gain. Be sure to follow me on IG. Hit me up in the DMs on IG if you ever want to rap, talk about finances, anything like that. And until that next Sexy as Hell video, I'll see you.